Hello everyone, and welcome back to the SBRE. We're going to do a recap of the Netflix 2015 movie, The Big Short. In today's video, we're going to look at the story of Michael Burry, who made a $1.3 billion bet against the housing market. Would he get a return on his investment? Let's find out. Make sure to watch the video till the end so you don't miss out on anything. Now just sit back, relax, and enjoy. The movie begins in the year 2005, where we are introduced to Michael Burry. Burry is the eccentric hedge fund manager for Scion Capital. He asks one of his employees to get him the list of the top 20 selling mortgage bonds. The employee gets slightly confused as each bond is made up of thousands and thousands of mortgages. Burry confirms this suspicion and says that yes, he wants to see all the thousands of mortgages in the top 20 selling bonds. Now, we get to see a concurrent story of Mark Baum, who's the hedge fund manager for Front Point Partners. Mark comes late to the meeting and hijacks the entire session by telling the story of a fraud he met while coming there. Then we get back to Burry, who is extremely busy in analyzing the top 20 selling mortgages. He goes through thousands of mortgages in the bonds and realizes something. He calls Lawrence, a fellow investor at Scion Capital, and explains his idea of shorting the housing market. Shorting the housing market basically means betting against its growth, so once the housing market collapses, he can get 20 to 1 in returns. Lawrence doesn't like this idea, as according to him, the housing market is rock solid. But Burry explains that these mortgages consist of extremely risky subprime loans, and according to his quantitative analysis, they are guaranteed to fail soon. It's here we get to know Burry is the first person who predicted the market collapse of 2007. Then we get to know a little more about Mark Baum, who is really angry and also sad inside, as his brother recently committed suicide. Now, Burry goes to Goldman Sachs and presents his demand of shortening the mortgage bonds. The bankers are so confident that they happily accept his bet. And even though there's currently no instrument for shorting mortgage bonds, they create one specially for Burry. Burry bets $100 million, and the bankers are really happy as they think they've earned free money. Burry then goes to several other investment banking companies and bets a total of $1.3 billion against the housing market. Now we get to another concurrent story of Jared Vennett, who learns from a colleague that someone has shorted mortgage bonds by $200 million in their company. Bennett is one of the senior executives at Deutsche Bank, and he gets really interested in Burry's analysis. Now at Mark's office, we get introduced to his team, Vinny Daniel, the numbers guy, and two others. There, they get a phone call from a wrong number and learn that Vennett is trying to short housing bonds. They get curious and arrange a meeting with Vennett. Vennett explains that these bonds are guaranteed to fail as the subprime loans were given recklessly. No income verification or background checks were done. Mark's team questions his math, and he says he's sure of the math. He has a quantitative analyst in China who won a national math competition in China. He offers them to buy credit default swaps from him, which is an instrument to short housing bonds. And he tells them that they can even make returns of 20 to 1. Mark says he'll think about it, and the meeting is finished. He orders his team to look into the matter as soon as possible. Then we get introduced to our last concurrent story of Charlie and Jamie. They are young investors of a fund they owned called Brownfield Capital. Charlie and Jamie have come to the JP Morgan Chase to start trading their platform. Unfortunately, they get rejected as the minimum fund requirement for ISDA is over $1 billion, and they manage only $30 million. ISDA is simply an agreement that lets an investor make high-level trades. There, they see the rejected pitches of people in the lobby. They find Vennett's pitch and learn about shorting the housing market. They get interested in this idea too and start doing their own research. Soon, they understand the idea and decide to get into it. But they don't have the ISDA, so they can't buy credit default swaps even if they want to. So they call their neighbor in Colorado, Ben Rickard, who was once a high-level trader in Singapore, and ask for his help. Now we see Mark's team, who is researching mortgage owners on the ground level. They research countless prospects and find out Vennett is right. People have filled out mortgage applications on their dog's name. Mark talks to some mortgage lenders and finds out that it's true. They've been giving mortgages recklessly, and the housing market is indeed about to collapse. He calls Vinny and asks him to buy the credit default swaps of $50 million. Vinny calls Vennett and after some negotiations buys $50 million worth of swaps. Now, Charlie and Jamie go to the airport to pick up Ben. Ben helps them get the ISDA agreement from Deutsche Bank. Then, Ben asks them to come to Vegas as the American Securitization Forum will be held there next week. And since all the bond salesmen, mortgage lenders, subprime lenders, and swap traders will be there, they can get more information on the current condition of the housing market. Similarly, Bennett asks Mark and his team to come there too in order to assess the situation. At Scion Capital, an employee asks Burry if the mortgage bonds are really going to fail. Burry says that it's possible and he can be wrong. He just doesn't know how. Now, we see Charlie and Jamie, who place tons of bets against the housing market. They start dancing in happiness as they've made a deal of a lifetime, but Ben stops them furiously. He says that they are essentially betting against the American economy and millions of people are going to lose their jobs. This is why he left trading too. It reduces people's life to numbers. On the other hand, Mark sits with a CDO manager to gather information. He soon realizes that the situation is worse than he had anticipated. Not just the housing market, but the entire American economy is on the verge of collapsing. He talks to Vinny and asks him to put $500 million more in those swaps. Now, we get back to Burry, who is so confident in the swaps that he freezes all the money of investors. It means that the investors can't withdraw their money. Due to his action, he starts getting back-to-back calls and emails, but he ignores all of them. Now, Charlie and Jamie see in the news that the mortgage bonds have started to go down. On the other hand, Bennett tells Mark that the credit default swaps are now the most popular instrument on the street. Now, Jamie calls and informs Charlie that Bear Stearns, from whom that bought the swaps, is in a class action lawsuit. So, they decide to sell their swaps for profit and call Ben. Ben is on a vacation in England and hardly gets Wi-Fi. He calls to sell his swaps and starts negotiating. Ultimately, he sells them for a price of $80 million, earning them a net profit of $50 million. Similarly, Burry calls to sell his swaps too and gets an overall profit of 489%. He writes an email to Lawrence that the amount of $489 million has been deposited into his account. On the other hand, we see that Bennett has received his check for selling the swaps. He has received a bonus of $47 million for selling the swaps. Now on March 14, 2008, everybody has sold their swaps except Mark Baum. Mark is invited to speak in a conference against a famous bullish investor, Bruce Miller. Bruce has invested $200 million in the stocks of Bear Stearns and is confident that the bank won't fail. Mark disagrees and blatantly says that he is wrong. He says that he's not worried about Bruce losing money, but he's worried about the average people who are going to suffer by this economic crisis. During the conference, stocks of Bear Stearns and other banks fall rapidly, so people start leaving mid-conference. Fast forward a few months, Bear Stearns and several other big banks of Wall Street have failed completely, and countless people lost their jobs. Now, Vinny calls Mark and asks him to sell the swaps right now, as this might be their last chance to do so. Mark starts contemplating Vinny's words and gets lost in the moment. On the other hand, Burry writes an email to all his investors. He confesses that making money is not what he thought it would be. It takes away one of the greatest characteristics of any person, honesty. And now, he's done with all of it, and he's closing down the fund. He writes on the board the total profit Scion has earned, which is $2.69 billion, and leaves the fund. Now, Vinny tells Mark that the swaps will make almost $1 billion right now if they sell, but Mark hesitates selling them as he knows the immigrants and poor people will be blamed in the end. He reluctantly agrees and asks Vinny to sell it all. With that, the movie ends. That was it for today, guys. We hope you enjoyed the video. What are your thoughts about this movie? Would you watch it? Let us know in the comments below. Also, you can add which movie we should recap next. Also, don't forget to leave a like and subscribe to our channel for more videos like this.